From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for August 16, 2016. In just a moment, we'll be taking a look at the GBPUSD, the Great British Pound versus the US dollar for today's trade analysis. But first, a recap of a couple of the trade suggestions made over the past few days. First off, starting here on the USD, CAD, the US dollar versus the Canadian dollar. If you were in the live trade room yesterday, we noted the fact that if it broke underneath this blue shaded area, we'd look for the continuation down towards the orange zone or lower, but at least down towards the orange shaded area. And as you can see, we finally did get the open and close, several candles open and close underneath the blue shaded area and the continuation lower. Now the problem is, during the trade room, we set up a pending sell order close to the 29.40 level, just at the bottom of the blue shaded area to go short if it rallied and retested there. And the market never went back up there prior to the closeout of trading for the day yesterday. Never went back up to there. So we removed the pending order, and either way, it never went back to the blue zone and just continued to go down. So if you got in a little bit early below 29.40, or you just went ahead and sold it underneath the blue shaded area, of course, profit was made. Otherwise, the pending order removed and no trade there on the US CAD. Similar situation over here on the US yen. Prior to closeout of trading, pending order should have been removed prior to the closeout of trading. And if you did that, you didn't get in it. Good news is that if you didn't get in it, it now pressured underneath the support. Let's go ahead and take it down to the 4-hour time frame. The black box is what we were studying several days on top of the blue shaded area, holding as support. The 101 down to 100.60 levels, what we've been studying in the live trade room. Let's zoom it in one more time here. You can see that level, the blue shaded area, multiple opportunities for support there. Yesterday, we discussed a pending buy order into the blue shaded area, 100.90 or so. If you did that, of course, the market has broken underneath there. If you removed the pending order prior to the closeout of trading yesterday, then you were safe and did not get into the trade in the overnight hours as it continued to pressure lower. If you did get in it, I hope that you were using appropriate risk strategies, because we noted the fact that if it got underneath there, likely down into the mid to low 99s, and that's where we're heading now towards the orange shaded area. 99.70 down to 99.30 is the next support lower. So if you got into it, then I hope that you used appropriate risk strategies. Otherwise, removing the pending order before closing the trade saved you from getting into this fall on the US yen. Take it over here to the GBPUSD, Great British Pound versus the US dollar. Of course, over the past many weeks, we have seen a significant fall off. Of course, with the Brexit news several weeks ago, we saw the significant fall off. For the most part, we've been sort of bouncing around in here, and I might even widen that black box out later on during the trade room to a larger range. But you can see the resistance, for the most part, top of the black box, and the support down at the bottom of the chart into the orange shaded area. Going to be easier to see when we zoom in a couple of times here. Resistance at the top of the black box, the pink zone, has been in a pretty much a free fall for the past several days. Touching down here, 28.75. Yesterday during the trade room, I told you that, during the live trade room, I told the attendees that if it broke underneath the orange zone, we'd look for it to go lower. But it was an imperative that it broke that orange shaded area and the 1.2875 level. It obviously never did that, and now we see the rally back higher into resistance. I also say during the live trade room quite often that if you're going to sell anything in the direction of the trend, momentum, and sentiment, you want to sell it at a higher price. You want it to go up to give you an opportunity to go short for the currency pair. And that's exactly what's happened over the past several hours. Let's go ahead and take it down to the 4-hour time frame. Zoom it out one time so you can see this red trend line here. We can see the falling red trend line, indicative of the short-term or near-term downtrend that we see here. We saw the market rally into the purple shaded area, into the 29.90 level, just underneath the 1.3 thousand level. We see resistance back here. We see congestion back here. We see support. So we know that that purple shaded area is going to be a decision zone where the market makes a trading decision to buy, sell, enter, and exit. So what we can do is make a similar trading decision. And in this case, lower risk means that we're looking to go short into resistance underneath the 29.90 level. If you look at the bottom of the chart, I have a sell 29.90 that I got into right at the bottom of the purple shaded area, protecting profit, looking for it to go lower here. In this case, our risk is a break above the purple zone. So your stop loss should be above The purple shaded area, that is 1.3020 is the top of the purple shaded area. So you'd want to get above there, maybe even going to 30 or 35 on your stop loss. So you're only looking at about a 40, 45, maybe a 50 pip stop loss if you got into the trade just underneath the 1.3000 level. We'll target back down to 2950, the green shaded area, and if it gets significantly bearish today, maybe even looking for a new low for the pound dollar today.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.